Welcome to the new weekly outlook, everybody. So as always, let's start off with the fundamentals and then move on to the technical side with Stefano's here today.
What's going on, guys? Hope everyone's doing well. It's always a pleasure to hop on and break down the charts for you, give you a good idea of where we're seeing the markets. So let's get right into it.
Absolutely. So I'm going to make it quite short today on the fundamental side because last week we did have a heavy week when it comes to economic data in general, with GDP coming out and a lot of consumer confidence and, just a lot of data in general coming out. And this week we have NFP, but we also have interest rates from the UK coming out. So there's two major news back to back. And a lot of the times we will see the market kind of consolidating. Sometimes the moves will happen before the interest rates come out or before NFP comes out. So it's very important to kind of understand what's happening from a fundamental perspective, but also understand how does that play into the market sentiment. So the last month or so, now going into August, for the last month or so, the markets have been quite heavy on the market sentiment side. So we have been tapping into those all-time high levels for a lot of pairs, or just monthly levels, weekly levels, and everything. The market has been consolidating there from a technical side, which Stefanos will break down in a little bit. But also from a fundamental perspective, understand that there's a lot happening when it comes to macroeconomics, macro fundamentals in general. So it's very important to understand what the economic data is kind of telling you. Pay attention to the data more than what's being said in the articles by Powell, by Pelosi, by Biden, or anybody else. But pay a lot of attention to the economic data because that's telling you exactly where the global economy and economy of certain countries is also headed. And also, most importantly, when you're looking at the pound or when you're looking at the yen, also understand that there's a lot of geopolitical stuff going down there as well. These countries are right now without a leader, so there are elections going on. There are elections coming up for a lot of countries as well. So a lot of geopolitical stuff, a lot happening with monetary policies, fiscal policies, interest rates, everything like that in general. So a lot happening from a fundamental perspective. With that being said, I want to start off with Bank of England first, where we have seen since the beginning of the year, Bank of England and the Fed, the US Fed, being quite aggressive when it comes to interest rate hikes. And that's to combat inflation, and the inflation that we have been seeing at record-breaking levels, just pushing and tapping into new highs compared to the 2007, 2008 financial crisis that we had. We've never really seen inflation like this and before the 2000s. That's really the last time that we saw it. So now the sentiment is that the inflation has been increasing so much and it's probably going to get worse over the summer, especially in the entire the European and the UK area, that the sentiment is that we're going to continue to see some more interest rate hikes, maybe until the end of the year. But with this month, we're probably going to see a 0.5 point increase when it comes to Bank of England's interest rate. So they are being quite aggressive. We just saw the Fed come out with their interest rates. They were being quite aggressive there as well. But we are coming and trying to combat the inflation that we have been seeing at record levels. So that decision is going to come out on August 4th. That's going to be very important to watch out for, and also understand that there's elections going on and all that stuff in the background that's ultimately going to be affecting the economic outlook of the country, of the UK. And at some point, even though the central bank is independent, they have to do some damage control, right? Whatever the administration makes decisions, whenever there's fiscal policies or anything like that coming out from the federal government, the central banks have to do damage control, and they will adjust their monetary policies according to that. So right now, while the elections are going on, we are going to continue to see the same sentiment from Bank of England, from the Fed, and a lot of other central banks in general who are going to continue to increase interest rates to fight inflation. But now we want to look a little bit more closer to the economic data and pay attention to what's happening on the consumer, retail, manufacturing side to see, are we really hitting the peak of the economy and kind of moving back into contraction? And what does that essentially mean? So what does inflation and recession and all of that look like right now for a lot of these countries?
Not too good.
And then another example, just to kind of add on to that, is take a look at Germany. So we just talked about the UK, we talked about interest rates. Now take a look at Germany, and their biggest problem is that now they're going to start moving into winter in a couple of months. But the problem here is they haven't been able to replace all the energy and all the oil and all that stuff that they used to get from Russia, the gas. They haven't been able to replace that. Germany is the biggest economy in Europe, and we're starting to see that there's a lot of problems, a lot of challenges that are being faced in Germany. So essentially, all that is going to get trickled down to the other smaller economies that's around it. But now the problem is, how do we replace that? Because Russia did say that they're going to start choking out the energy, the gas, and all of that they have been providing to Europe, right?
Mhm.
And we're starting to see sanctions being put in place, not by just Europe, but like US, UK, and everything in support of Ukraine. So now, what is pretty much Germany going to be doing in the next couple of months to kind of combat, not being able to use their hot water, not being able to have heating systems and things like that, or just, very limited use compared to what they are used to already.
And we went through something similar in the 70s, but nothing to this magnitude.
Yeah.
Not on a global scale, at least.
Absolutely. So Russia was the European Union's biggest gas supplier, covering about 40% of demand. So 40% is what the European Union has to replace in order to
Crazy.
completely cut themselves off from Russia. That is a significant amount, even though it may not sound much, but that's quite huge for any country.
I think we've been exporting a good amount recently, right? In the last couple of weeks.
We have, and so has UK has stepped up too.
Okay.
But we can't possibly match, what Russia has been doing for decades.
We got to take care of ourselves.
Absolutely. So now moving on to the economic calendar. So starting off with Sunday, start off quite easy, not much coming out. We had a couple of bank holidays, even going into New York session today. Then we have manufacturing PMI come out. So when you look at the historical data here for manufacturing PMI, we have been fluctuating for quite some time, right? Since 2021, we have been quite fluctuating, and our numbers here. And we already have GDP, advanced GDP, and all that come out last week. So we already kind of understand where do we sit right now in the economy. We're officially in a recession, right? So maybe next month, this data comes out every month. Next month, we're probably going to see this number drop down significantly compared to what it is right now. So in order to understand will that happen or not, we have to pay attention to, again, manufacturing data, other manufacturing data that's going to be coming out, and just following that. Manufacturing prices are coming out, what's happening on the consumer side, what's happening with the retail side, because the consumer, again, is the core of the economy. So we didn't drop down significantly compared to what we were forecasting, but we are starting to see a little bit of more contraction. As soon as you fall below that 50 mark for any PMI data, you start moving into a contraction of that industry. Going into the Asian session today, again, the big news is going to be interest rates coming out from Australia. So it seems like they are expecting half-point hike here. So again, a lot of central banks are being aggressive right now, minus Bank of Japan, who said that they would be maintaining their accommodative policies. But again, we are seeing that there's hyperinflation going on in Japan anyways, and they're sitting at negative interest rates. Now going into London session tomorrow. So again, not much coming out until New York. We have the job openings coming out, and this is going to be pretty much giving you, it's pre-data to NFP, right? So it's going to be giving you a better picture of what to expect when NFP comes out on Friday. So we are expecting these numbers to decrease. We are coming down to 10.99 from 11.25. And this could be supported given, if you look at the unemployment claims and everything from the last month, it comes out every week, right? So take a look at that and take a look at other employment data that has been coming out the last couple of weeks, and that will help you understand where are we sitting at when it comes to job openings. And then moving into Asian session, you have a lot of New Zealand dollar data coming out. And then after that, it's quite easy. You have CPI coming out if you're trading the CHF, but that's about it. Things are quite easy. And then Wednesday, the big news is really going to be the services PMI, same thing. If this starts to contract, then we will see that being trickled over to the manufacturing side, maybe going into next month. And then Thursday is really when things start to pick up. So I wouldn't be surprised if the market slows down a little bit on Wednesday Asian session or Thursday London session, getting ready for interest rates coming out from the UK. So really pay attention to what they're saying in their monetary policy report. And then you also have a Bank of England governor speaking. So this is going to give you an outlook of what to expect for the UK, for the Bank of England, for interest rates for the next couple of months or so. So this is going to be very important. So we are expecting 0.5 point hike here as well. Then you have challenger job cuts coming out and unemployment claims. So you could trade that, but it's going to be quite low impact. I'm not really expecting much to happen there. And then you have the monetary policy statement coming out from Australia. So I do expect a little bit of volume when it comes to 15-minute, 30-minute timeframes. But other than that, that's about it. And then Friday is going to be the big day with NFP coming out and unemployment rate coming out. So let's see if we can see a hike here of some sort. And then obviously looking at NFP dropping here significantly compared to the previous. All yours, Stefanos.
Absolutely. I'm just going to share my screen. Excuse me 1 second. All right. So taking a look at the technical chart over here. Great job, Sharma, with the fundamental breakdown. Hopefully you guys got a lot out of that. Looking over here at GJ over here, 167,500, that level up here, we keep projecting, right? If you see it on the lower time frames, I'll point it out in a second. We keep creating these lower highs from that area. Not to mention the extremely strong Japanese yen. Well, not extremely strong. You can never really say that about the Japanese yen, but as of late, it's pretty strong. So that's what's playing into these pullbacks on the Euro JPY, GBP JPY. A lot of these JPY pairs over here, you're going to see a lot of those pullbacks right now. So not to mention the technical pullback where we just created these highs up here. Maybe we're going to get a pullback or some kind of a retest of these areas over here before we continue back up with possible rate hike. So looking over here at the weekly, we'll be able to mark down a few levels. You get that 167,500 level up here that we keep projecting. You could always draw that right here, which obviously is that 166 level. You'll be able to see that easily on the lower time frames as well. But we know that 167,500, 168 is definitely a key level up here that we keep projecting as of late. So what I like here is the fact that we keep projecting this level. You got a strong bearish candle close at that level. We failed to break this level as well, right? We came right back up into that area, rejected it, and closed below this level. Came right back up to 166, rejected it again, closed bearish. We already have on the new week a top wick formed on this candle, and we passed the low of that candle. So could we be coming down into that area around 160 flat, which I normally mark off over here? Could we be coming back down to 160 to hold support and possibly continue back up, or maybe we even get a further pullback? I'm just going to move this trend line a little bit over here. This is that trend line since the beginning of COVID that we could be coming down into. This could end up being, if you look at it strictly on the weekly, 158, significant level right here. Previous support and resistance could end up being a key level right here where price bounces off and we create price action just like we did over here, right there, where we continue up from here, right? So looking at, I want to get through this kind of quickly because there is a trade presenting itself right now. And you can even see it on the daily right now as we already created a top wick and passing the low of the previous after 3 consecutive very bearish candles over here. And this is that 166 level that I just pointed out that we keep rejecting. Let's mark off this yearly high up here around 168. Called that resistance. Now we keep rejecting that area, printing these lower highs as you guys could see. All right, so that was a key level right here. Price bouncing off that level and continuing down. So far we ended up getting this close over here below support and previous resistance over here to the left, previous support in this area as well. We ended up getting that close below, getting a top wick right now. Can we continue down and fill that wick, fill these wicks over here? We can mark off that 160 level right there. That could be our next target other than this wick right here. Looking at the 4 hour now, 4 hours so far, we ended up holding previous support, turned resistance right in this area, strong bearish candle close over here, and we're just continuing down. This candle closed with no bottom wick, but you got a healthy top wick on this candle, where we're now passing the low of that candle and continuing down. Again, that's that previous support. Also, now a resistance over here. Further confirmations that we could continue down from that area. Got a support right here, nearest support. Clean move to the left. Right, that's another confirmation for you.
Oh,
Looking
that's
at the one.
perfect trade setting up.
Oh, I know. I'm actually in it right now. So I took it as you were doing your fundamental breakdown. It's just too nice. Like, this is exactly what we were looking for this morning as well. Where price kept rejecting this area up here. Right now, it was kind of like a fake out, because we had our previous resistance in this area. We were holding support this morning, right? And we finally broke through, continuing down. We broke that support right there. We have a resistance holding in this area. Strong bearish candle, respected the high of the previous, past the low of that candle. Now we're retesting that area to continue down. Again, this is our nearest support over here to the left. Looking at the 30-minute now. You got that support right there. We're respecting it right now. Now looking at the 15-minute, same exact thing. All these time frames line up for possible sells to continue down. My stop loss is, where's my entry? My entry is 161.095. So it was right here, right after the candle closed around like 8:02. And my stop loss is above these wicks over here. So definitely safe enough. Definitely safe enough for price to continue down. As you guys can see, you just got to stay patient and wait for your setups, right? And these are our setups right here. We got some nice volume during Asian right now. We should be continuing down. Yeah, so that should be a good setup or a good trade.
Right there with you.
Awesome. You're in this too?
Yep.
Awesome. I wish we could have done this a little bit earlier. We could have given them a nice trade. But if you guys join us on Wednesday, we'll break down a nice trade for you and hopefully catch one as well.
Absolutely.
Looking at gold now, again, historical levels broken down. Got a nice monthly candle closed bearish with a wick to fill, but we ended up bouncing off of this 1680 level with the dovish sentiment from the Fed. Right, price ended up pushing all the way down here with the rate hikes, been creating lower lows, lower highs, pushing all the way back down to 1680. Every time we tap into that area, we end up just basically skyrocketing. So we got a nice rejection off that area. Can we end up filling that wick, right, with more rate hikes? But I don't know. It doesn't sound like they're too eager to hike rates as of the latest meeting at least. So we'll see what we end up doing. Looking at the weekly now. Weekly, again, very strong bullish candle close. Closes, plural. And right now we have this nice bearish trend. It's also a channel as well. Price bouncing off this area that supported the channel. But we got bullish candles closing. Previous one was very strong last week. And this candle already created a bottom wick. We're passing the high. Can we be coming up into a level like this here to the left? Right, to hold a resistance to then continue down. Every time we keep creating these lows, like right over here, we bounce back up to that trend and then we continue down. We hold a resistance, then we continue down. This is also a key level right here. So can we hold that resistance and continue down? 1750 over here, we are above it. So that's a telltale sign that maybe we continue up from here, but we're right back into this range between 1830 and 1750. Continuing up from here. So I just want to secure part of my trade here. All right, good. Okay, so looking at the daily, we've been getting some bullish candles ever since around the 20th of July. We got that bounce off that area. We've just been creating higher lows and higher highs. Broke through 1750, pushing up. These candles may be getting a little bit weaker in this area. Let me see if I want to adjust this just a little bit. This is a key area that we've been marking up for a while now, that previous support, term resistance for about 2 weeks, and then held that support around that 1788 level. Then we wicked into the area, wicked into it again. So can we be continuing up into that area as well? But you do have this support right here that you need to be aware of. So we'll see what that looks like in the lower time frames. All right, looking at, I'm just going to adjust this. Yeah, actually, that is our most recent resistance right there. Turn support so far, right? We're so far rejecting this level, right? Can we come down to retest that level again even more and continue up? Or are we creating a bottom wick, passing the high of this weak bullish bearish candle, right? And then continuing up to fill these wicks and continue back up to that 1788 level. Let me just look to the left a little bit. See, we could be wicking into this previous resistance right here and then continuing up. You look at the 1 hour. Okay, 1 hour now. Can adjust this. Support, resistance. We're now ranging in this area. I personally am not going to be taking anything. I don't think I'll be taking, yeah. This is too messy. Just think about it. It's the first of the month. Well, unless you're in the eastern part of the world, it's the second of the month. Tuesday, we have NFP week as well. So just be aware of trading in here. Maybe you want to wait for price to break above there 1774 because you get the clean move to the left right here once it does, right? So it's a little bit, it's definitely worth waiting to catch that. And plus, if you're trying to catch, like, let's say I could see some of you looking at this area for price to close below that area and continue back down to 1767. But again, you're trading against trend in a range. So it's maybe not worth it. Just stay calm. It was interesting. Someone in my group was analyzing their trades, telling me how during NFP week, they end up really losing a lot of trades in the beginning of that week. They get antsy for some reason. And then the rest of the month, you know, second, third, and fourth week of the month, they end up killing, right? So their main objective for this week, I'm telling them, is to just focus more on patience right now and really wait for their setups and be disciplined even more than you normally are, at least, or put more emphasis on that as much as you can.
100%.
So,
And if I could interject real quick,
nope.
There's a ton of consolidation clearly, like bits off the 30-minute, 1 hour, a little bit on 4 hour as well. So again, just remember that whenever you see a consolidation like this, hop up to the higher time frames, right? And take a look at what's going on. So I would say, like, if we could go up to the daily real quick, and then we'll just kind of move down from there real quick. Yeah, if you go on to the daily time frame, really, when's the last support that we had? And that was after bouncing off of the 1680, right? We've been insanely bullish. Yes, a lot of this is also from the fundamental side, and also given that we tapped into 1680, which is a liquidity area. But the fundamentals are coming from the fact that there's tensions rising when you're looking at, you know, the global perspective. Pelosi going on to Taiwan, Biden speaking with the Chinese president, things not really working out there, giving each other warnings, you know, those tensions going on. On top of that, you have inflation going on, you know, potential recessions and whatnot. A lot of fundamentals, but don't forget that from a technical side, everything has to be corrected. So wait for some of those pullbacks, right? And then a continuation back up. So when you see a ton of consolidation here and here on those lower time frames, understand that there has to be some liquidity that needs to be generated before price can continue pushing back up. Then think about how does that look like on the 4 hour, 1 hour, 30-minute time frames, and then look for your trade opportunities there.
Oh, man, absolutely. So I think that was a good breakdown for you guys. You guys saw a good trade example. Again, I already secured on this trade. We're around 17. You should try breaking down gold around 16. Wow. 160, 860, right around this area over here, around like 21, 22 pips. I ended up securing 80% of it, and now the rest of it is about to hit my take profit. Yes, about to hit my take profit. So again, easy setup. These are the ones you look for. These are the ones where you're 100% 90, 95% confident that this is going to play out. Those are the setups that you want, especially during Asia, and especially in the beginning of the month and the week. So guys, hang tight this week. Wait for your setups. Be disciplined. Focus on that right now. Journal your trades and just stay patient. And you guys should come out the other end of this week and the other end of this month. So, again, it's August 1st. So put everything into this month and do everything to make sure your craft is improving every single day. You're going to bed way better than the way you woke up. So that should be your focus.
Absolutely. Some closing marks real quick is that we will be having our Forex bootcamp. We have it every quarter. And this is so then we can help you guys kind of understand the basics of Forex, and also those advanced traders who have been struggling moving past the break-even point, or, you're not really sure how to compound your account. You end up over risking, over leveraging, over trading, having any of those issues. That's what, the boot camps are for. The purpose is to kind of give you guys some strategies that you can incorporate, leaving the boot camp into the next month, into the next quarter, things like that. And then you're able to really improve. Of course, we're always here otherwise to answer any questions. A lot of you guys reach out to us on Instagram, and we love, hearing your guys' messages, seeing your guys' messages, especially when you tag us, in your wins or anything like that. It's great seeing that. So thank you so much for that. But the bootcamp will be on August 20th. There is a sign up form. So I have posted that on my YouTube. It's under community. So go ahead and just click on the link and sign up for it. Or you can just go to Sharmafx.com and sign up through there. So the sign up is going to end on the 13th. So make sure you sign up before the 13th if you want to join us in the boot camp on the 20th. You see us do this every single week. Every single week we're giving you weekly outlooks. There's a lot of secrets of trading. We do a lot of live sessions with you guys too, and we do simulation sessions. Just imagine all of that packed into just 2 to 3 hours straight, just working on this craft. Like Stefanos always says, you always want to be working on your craft. So this is your guys' opportunity to kind of come and ask us questions. And, we would love to meet any of you guys.
Absolutely. Couldn't have said it better myself.
Awesome. As always, stay safe, guys. Sometimes you end up hitting a TP while doing a weekly outlook.
Been doing that a little bit more often lately.
There you go. Awesome.
All right. So we'll see you guys Wednesday, okay?
All right. Have a great one, everybody.
Bye, guys.